Turns out the soaring temperatures from last week heated up inflation as well as the rest of the country. Inflation picks up again in June, rising at 2.7% annual rate. And for those of you keeping track, that's 2 straight months of inflation increases, which really sucks because for most of the year, we had actually been doing pretty well with inflation. It started at around 3% in January and has been steadily coming down pretty much ever since, with the exception of May, and now again with the exception of June. Consumer prices rose in June as President Donald Trump's tariffs began to slowly work their way through the U.S. economy. The Consumer Price Index, a broad-based measure of goods and services costs, increased 0.3% on the month, putting the 12-month inflation rate at 2.7%, the Bureau of Labor Statistics reported on Tuesday. The numbers were right in line with the Dow Jones consensus, though the annual rate is the highest since February and is still above the Federal Reserve's 2% target. Excluding volatile food and energy prices, core inflation picked up 0.2% on the month and an annual rate of 2.9%, with the annual rate in line with estimates. The monthly level was slightly below the outlook for a 0.3% gain. So prices are up, and the expectation is that not only are prices up right now, but that prices will continue to go up as well. The expectation for increases is increasing. And this actually makes sense when you think about it. Firstly, we're actually expecting more tariffs, and even though tariffs have not been the biggest contributor this time, we'll get to that in a little bit, if we continue to levy tariffs on all the imports and against specific countries that we do a lot of trade with, then tariffs will become one of the biggest indications of how much inflation is going to be, and also one of the biggest reasons that inflation continues to go up. President Donald Trump on Saturday announced he's levying tariffs of 30% against the European Union and Mexico starting August 1st, a move that could cause massive upheaval in the United States and 2 of its biggest trading partners. Trump detailed the planned tariffs in letters posted on his social media account. They're part of an announcement blitz by Trump of new tariffs aimed at allies and foes alike, a bedrock of a 2024 campaign that he said would set the foundation for reviving the U.S. economy that he claims has been ripped off by nations for decades. Now, these have not happened yet. Like the article said, the go-live date for these is allegedly August 1st if they don't get pushed off. But right now, we do have tariffs happening. There's a blanket 10% tariff on all imports coming into the United States, and that has actively contributed to inflation. And in addition to that, you have these tariffs that might go into effect in just a couple of weeks. So tariffs are happening. They are happening right now, and they are contributing to inflation. They're not the biggest contributor, we'll get to that in just a sec, but they are a contributor given the 10% blanket tariffs that Trump has imposed on all imports, but also they will become much larger of a contributor to inflation, which will continue to grow if we have more tariffs, especially if we increase our tariffs against some of our biggest trading partners to 30%, like Trump says that he's planning to do in this article. More tariff equals more inflation because it will cost more to bring stuff into the United States. And I know some of you might say that, well, other countries will be the ones paying for the tariffs. Isn't that how it works? And I have to say, no, we are the ones that are paying for the tariffs. CNBC talks about this. Increasing tariff collections are helping shore up the government's finances. Custom duties totaled about $27 billion for the month, up from $23 billion in May and 301% higher than June 2024. On an annual basis, tariff collections have totaled $113 billion, or 86% more than a year ago. These tariffs are a tax that importing companies, so companies in the United States bringing in goods, are paying to the US government. They're the ones paying for this, and then those companies, because they don't want to lose profits and have their shares go down, will raise their prices and pass those costs along to the consumer. The $27 billion is not being paid by other countries or coming out of just magically out of the air. It's something that we, the citizens and the companies of the United States, are actively paying for. And companies are, of course, going to raise their prices and pass these costs on to their consumers. Otherwise, you get things like profits going down, which might cause people to panic, which would cause their stock price to go down, and would cause the executives not to get billion-dollar bonuses. And we all know in business that that is the most important thing. We're going to go back to the original article, but if you're enjoying this, I would love a like on the video. I'm a tiny channel, and it really helps out. Back to the original article. Before June, inflation had been on a generally downward slope for the year, with the headline CPI at 3% annual rate back in January and progressing gradually lower and slower in subsequent months, despite fears that Trump's trade war would drive prices higher. While evidence in June was mixed on how much influence tariffs had over prices, there were signs that the duties are having an impact. Vehicle prices fell on the month, with prices on new vehicles down 0.3% and used car and trucks tumbling 0.7%. However, tariff-sensitive apparel prices rose 0.4%, and just so you know, apparel prices had dropped, I believe, for like the past 3 months in a row. Household furnishings, which are also influenced by tariffs, increased 1% for the month. So tariffs are the big story, but to be clear, they are not the only story, as is said here, while the evidence about how much tariffs influenced the prices is mixed. But if you were to just look at the articles that have been put out, you would assume tariffs were the big and main contributing factor factor. I've looked at lots of publications and almost all of their headlines blame the tariffs, when at most the tariffs are having a moderate impact. Not an insignificant one, but they are certainly not the biggest. But to be clear, in time they will become the biggest contributor if we continue to push tariffs on other countries. But to suggest that they're the main thing, or really anything other than a tertiary reason that prices are increasing, is simply incorrect. But if you were to, say, scroll through the headlines, you would assume that this was the case. CPI shows inflation sped up in June as Trump's tariffs push prices higher. This is also, here's how Trump's tariffs could be impacting prices for U.S. consumers. And then here we see another one. Inflation picks up as tariffs start to seep into prices. And many other newspaper articles are talking about this with the word tariff in the headline, because tariffs are what everyone is talking about and interested in right now. So you wouldn't be blamed for assuming that was the biggest or the main reason that prices had increased. But actually, it's something else that you would probably expect if you were to take a second and guess. It's housing. Shelter prices increased just 0.2% for the month, but the BLS said that the category was still the largest contributor to the overall CPI gain. The index rose 3.8% from a year ago, which is absolutely huge. Within the category, a measurement of what homeowners feel they could receive if they rented their properties increased 0.3%. However, lodging away from home, so like hotels, Airbnbs, Vrbo, and so on, slipped 2.9%. So here we have the biggest issue. The main reason prices are going up and everything feels like it's unaffordable and increasingly becoming more unaffordable at a faster rate. It's because housing prices are far outstripping wages and pushing up inflation. But because housing is not a hot topic like it was during the pandemic specifically, when housing prices went absolutely crazy, you will not find houses in any of the headlines. Nobody's going to say prices go up not because of tariffs, but because of houses, because nobody cares about houses right now. Everyone cares about tariffs. Because that's on everyone's minds, publications will play into this to try and get your attention, your clicks, your money, and so on, even though it's mostly not the case that tariffs are the cause of this. Now, thankfully, CNBC talks about this, but if you look at the total size of the article, they mention it like still about 50 to 60% down the way at the page. But at least they do include this quote, which I think is pretty good. Quote, "It's really hard to point to this report or any details in the report and say, aha, see what's happened to prices because of tariffs," says Dan North, senior economist at Aligns or something Trade North America. Quote, "You get these pretty massive tariff increases. It's bound to pass through to consumers, and I still think it will, but it's not on this report so far." Now, that doesn't mean it's not going to be on the inflation reports. Again, if we continue to impose more tariffs, absolutely it will. A year from now, if we've imposed 30 or 100% tariffs on our trading partners, then yeah, the inflation is going to be through the roof, which will, of course, cause harm to the U.S. economy and a further weakening of the U.S. dollar as the U.S. debt gets even more out of hand than it already is. And I think it's reasonable to criticize this because most economists agree that tariffs, in the way they're being implemented, are not a particularly good idea and will serve to harm consumers, American consumers, far more than they will serve to hurt the countries that Trump is trying to hurt. Now, given all the new data that's coming out and the people weighing in on it and the economists talking about what it means and why it's happening, of course, you had Donald Trump going on a tirade demanding that interest rates be lowered, despite the fact that this is an indication that interest rates should not be lowered. Here's his first truth, but I'm getting it on Twitter because I don't have a Truth Social. "Consumer prices low," which is actually not exactly true. "Bring down the Fed rates now." In typical Trump fashion, you've got lots of exclamation points, lots of capital letters, but just to be clear, consumer prices are not low. Consumer prices are up, and they're going up faster than they have been in previous months. But this isn't the only thing he said about it. He said this: "Fed should cut rates by 3 points. Very low inflation. $1 trillion a year would be saved." First of all, $1 trillion a year would absolutely not be saved. I don't know how much would be saved. I haven't looked into it. Plus, it would all be so theoretical. It'd be very difficult to calculate, but I can guarantee you it's not $1 trillion. But to cut it by 3 points would be an absolute disaster and almost immediately lead to hyperinflation, higher unemployment, and your dollar going basically nowhere. He also emphasizes very low inflation, which is not true. We just saw that inflation is higher than it needs to be, and also is higher than it has been in months past, even since his administration, and is also still well above the 2% target that the Fed aims for. Consumer prices are not low. Inflation is not low, and the Fed should not cut interest rates right now. Cutting interest rates too much or too early could lead to hyperinflation or stagflation, and that's not a risk that the Fed is willing to take, nor should it be a risk that the Fed should take. It's much better to be cautious than it is to see what happens. And thankfully, Powell knows this. Powell said the Fed would have cut rates this year if it weren't for the tariffs. Because let's say that the Fed had decreased rates when Trump first started yelling at them to do it. And then if we saw these inflation increases, then we would have seen the market tank as people panicked. And then we would have risked hyperinflation and a spiraling inflation while the economy shrank and inflation went up like we saw in 2022. And nobody wants a repeat of 2022. High interest rates are like vegetables. and I don't want to eat my vegetables, but I understand that they're necessary for the health of my body, or in this case, the health of the economy. And yet you go and hear clips like this from people who don't know what they're talking about, pretending like they do know what they're talking about in reference to things like tariffs and interest rates, only because they're parroting things that Donald Trump has told them to parrot on the media to try and add some pressure to Jerome Powell.
It's unbelievable that, Jerome Powell is just sitting around waiting. The president calls him too late. It's just too late, Powell. I mean, why hasn't he cut? I mean, you remember, if he cut interest rates 1%, and you got Europe cutting like crazy, you realize that saves America $300 billion a year? It's unbelievable how much we would save if he did his job and he cut interest rates. The economy is ready for it. It's easy. Inflation is low. Come on. He's got to do his job soon.
There are so many things wrong with this clip. First, Powell doesn't cut interest rates. The Fed as a collective cuts the interest rates. Powell is not some sort of a singular dictator that decides whether interest rates should go up or down. There are 12 voting members on the Fed who each have an equal voice in this, and their decisions are majority rules. However, it is worth noting that almost all decisions by the Fed to cut or not cut tend to be unanimous. Every single vote to not cut interest rates since it reached its 4.25 to 4.5% rate that we are currently sitting at has been unanimous. All of them collectively realize that it is a terrible idea to do this, and to assume this goofball on Fox News knows better than 12 of the smarter economists that we have in the United States, and also all of their advisors and the advisors of the companies that they work for, is kind of absurd. The second thing he said is that Europe is cutting like crazy, and I wouldn't say they're cutting like crazy. In fact, the UK actually has increased inflation recently, along with Germany. But those countries don't have additional inflationary tariffs that they're imposing on their own citizens. They have less to worry about when cutting because they don't have tariffs looming over their heads. The third thing he says is that inflation is low. And frankly, it's just not. Not only is it not low, it's not at the target, and it's also actively getting worse. It is not time to cut rates if inflation is actively getting worse. Also, I just have to throw this last thing out here, just talking about Jerome Powell because he's getting so much hate from conservative media. If he is replaced, there's still 11 other members that are voting not to cut rates. It doesn't matter if Trump replaces him with someone that will always vote to cut rates. The rates won't get cut. It would be 11 votes against 1 vote, and then it wouldn't happen. This idea that Powell is the end-all be-all of rates at the Fed is just absurd. So there you have it. Inflation is heating up, not altogether unexpectedly. Interest rates will probably stay the same at this next meeting, and maybe they'll cut in September, but we'll have to see. Donald Trump is upset about it because he doesn't understand how the CPI works or how inflation works or how tariff works. So thanks for watching.